A rate hike could be incoming. Today, we're going to be breaking it down for you. But before we get started, I want to thank our sponsors. You've probably heard me mention Uphold before, and there's a reason I keep talking about them. Uphold makes it incredibly easy to bridge the gap between your portfolio and the real world. This has not been done before. Their Uphold debit card is the best example of that. It lets you spend your crypto or your cash anywhere Visa is accepted, all while earning 4% back in XRP on every purchase. It's the easiest way to stack rewards on your daily spending. Download the Uphold app for more and get started. All right, guys, let's get into it today because there's a couple of things I want to focus in on. The Fed rate hike potential in 2026. You had a little bit of a dip, but now here recently, over the last few days, we started to see this move, and it's holding at a 34%, but considerably up from where it was right there, which was May 20th. Just yesterday, we saw 23%, and then all of a sudden, boom. And there's a reason why that has occurred, and that is this right here. The Fed meeting minutes now are showing that the majority of officials thought rate hikes may be needed if inflation persists. So this is a big turn of events. I would agree with this. The market could see this in a bad way. In fact, if we see Kevin Warsh going in on this, I wonder how this is going to play out with Trump. The odds right now of a rate hike by January or above 55%. Right now, rate cut, 0%. So this is not looking good for Trump's overall plan of what Kevin Warsh was designed to go in and do at the Fed. But instead, we may end up getting a rate hike literally out of the first meeting. Let me go to a clip real quick because this will get into whether or not it can be expected. Take a look.
So you turned some heads today because you're such a bull in this market, and you stay with your target of 82.50 for the end of the year. But you think the Fed could actually hike rates in July?
The 2-year is now indicating that the federal funds rate is too low. The federal funds rate range is 3.5% to 3.75%. The 2 years at 4.1%, and it's a pretty good leading indicator of what the Fed should do, and very often it gets it right.
So you're one of those in the Fed follows the market camp, it sounds like.
Well, I think the Fed doesn't really want to get behind the market. Being behind the market is being very much behind the curve.
All right, behind the market, behind the curve. That's what everybody's looking at. What I don't understand is how we get rate hikes and we could still see another blast off in terms of the SPY. So very interesting points right now. Now, there are some things that could play into this. Most of this has been centered around data collecting, and this is something that Jerome Powell talked about all the time. But David Sachs talks about this as well, and he goes into the process of how this could be modernized. Take a look.
One thing that Warsh could do that I think would be very impactful is just get better data at the Fed.
Yes.
I mean, from what I understand, their data is all legacy. We have so much real-time data now in the private sector, and the Fed. So I was talking to Barry Sternlicht, from Starwood, big real estate guy, about this. And he was telling me that the way they measure inflation for housing or for rentals, which is a major component, is they survey like 8,000 households to find out what their rent is. It's like, are you kidding? Is they're using stale data or laggy data, so they don't see the inflation when it's skyrocketing, but they're also not seeing when it's decreasing.
If you think about the misallocation of resources that occurred as a result of the Fed not acting in June of 21, it cost our country trillions of dollars.
It's actually a great point, Sachs. You could probably make a bet or an investment on the idea that Kevin Warsh will lead the Fed to a new digital, better data system, more streamlined, more frequent, better data.
More real time.
And then as an investor, you could ask yourself the question, okay, what are the implications of that being the case? And you could probably start to trade on that.
All right, so if they do go real time, listen, that's blockchain, guys. We all know that. That's the only solution that would really give, I think, Kevin Warsh the upper hand here. Now, that could change things dramatically because if you do get real-time inflation data, you get real-time market data, you get real-time jobs data, all that kind of analysis would really kind of change, I think, maybe the forecast looking forward, especially because right now, remember, every time that Powell would come to that podium, he always says our forward-looking statements are based on more data coming in. I think this real-time data is a big deal, and it could change the way the Fed breaks it all out. President Donald Trump, though, issued an executive order to allow integration of digital assets into traditional financial services. It's a big deal. as we go forward, meaning he's still a crypto president, even though I'm still looking at him in other digital assets and other assets in general, but he is still in a crypto president role. The real question is how is he going to play this out if Warsh ends up doing a rate hike? The next thing I want to get to is where Saylor is, and he thinks we are in a crypto spring. Listen to what he had to say.
Why you wear orange ties? You got how many?
I got a few dozen. Cool. Every day's a good day for an orange tie, Joe.
Pseudo winter that we've been through for a while. Are we closer to the end?
I think so. I mean, I think we were at the top in October, about 125. I think we bottomed at 60. I think we're moving into the spring phase. We've got decent support here in these levels. I think we'll rally from here. We're just working against a few macro headwinds right now. Well, I think the passage of the Clarity Act will be a big deal. I think even in the absence of that, the release of guidance that lets you tokenize securities and sports digital assets out of the SEC, the innovation exemption, that would be a big deal as well. If you can tokenize a bunch of securities, then you can shop for the best credit terms and the highest yield. And in the 20th century TradFi economy, your bank decides that you just won't get credit, you just won't get yield, and there's not a single thing you can do about it. And so tokenization is a free market in capital, and it creates just a higher velocity and a higher productivity for capital assets.
If it finally was completely stable and reflected what 121 million, the end result, what price are we talking about? Have you done the math on that?
Well, I think 21 years out, I don't know why it wouldn't be 21 million a coin.
All right, so there you go. Michael Saylor really going in on DeFi, almost very unrecognizable in the sense of where he sees this going. Quite a bit different in terms of, yes, Bitcoin is still the cornerstone of it, but a lot of the products and services, what he's talking about there, is really what is going to happen in the DeFi era. The other thing that is key is some of the things that are happening on the macro horizon. One of the biggest macro horizons, I guess if you could consider this more legislative, is really where clarity is going to be. Cody Carbone now gives a roadmap of what he thinks is going to happen here. Take a look.
The bill now progresses. That's ultimately going to be voted on the Senate floor, or where they're going to need 60 votes. So while it's great that we had 2 Democrats vote for it out of Senate Banking Committee last week, we need at least 7. And that's if you have every single Republican, 53 Republicans. You need at least 7 Democrats. There's a group of 12 Democrats that have been working on this over the last few months. So the goal over the next 2 to 3 weeks is to finalize negotiations with them, bring this one product to the Senate floor, hopefully the 2nd or 3rd week of June is what we're looking at. Pass that bill on the Senate floor with a bipartisan vote. Then it's got to go back to the House one more time, because what the House passed last year, which feels like decades ago, is a substantially different bill. So the House is going to have to vote one more time. And after the House votes, and you would hope that if it passes the Senate with a bipartisan vote, the House will pass it with a bipartisan vote as expected. This thing goes to the president's desk, and they're hoping early July, a July 4th signing ceremony. But sometime in July, President Trump signs this and clarity is enacted into law.
That would be unbelievable if that were to occur. Now, remember, all of this is boiling down to what's happening right now, I think, especially as we lead into midterms. Now, there are some people out there, though, that still believe that clarity is not needed. Arthur Hayes says it. Take a look.
I said, we don't need no regulations, right? Who cares? Clarity Act, I hope Trump vetoes it if it ever gets to his desk. Don't need any of these regulations. If Bitcoin and crypto needed regulations to survive, we wouldn't be worth a dime. Because what's the point? If you're just going to have another Fugazi derivative that sits on some member of the financial system's balance sheet, we got that. We don't need that. What's the point? And I think people miss this distinction. The reason why banks want to offer this product to their clients is because the product does something for its client. It's a non-correlated asset that's done very, very well in inflationary environments and environments when lots of fiat has been created. Obviously, their clients want to have some of that, and the bank is in the business of making fees and providing the product that their clients want. So sure, they want to onboard crypto.
Like, tell me this thing has any chance of passing.
I mean, I hope it doesn't pass. But
all right, so there you've got Arthur talking about it, that it's really not necessary. But at the same time, there are the traditional capitalists out there, like Kevin O'Leary, who breaks it down saying, hey, now's the chance. See what he had to say.
Tokenization will never be adopted by institutional index, ever. Neither will Bitcoin, which is still a fringe asset to the big guys. I mean, it has to become compliant globally within the SEC with an actual passage of a bill. When that occurs, it's going to change everything. But it hasn't happened yet. And the midterms are coming in November. The chance to pass this bill is now. The tragedy since last October on all of the altcoins, and I call them poo-poo coins, they got slaughtered because the large institutions preparing for indexing, thinking the bill was going to pass at the end of October, figured out that 97% of the entire vol of the entire market is simply BTC and ETH. That's all you need to own. You don't need to own anything else.
All right, so you've got a couple of points there. I think the key is when you look at regulatory frameworks being built around industries, almost every major industry out there has had some sort of regulatory alignment. So if you agree that digital assets is an industry, which I believe it is, then there's going to be a regulatory framework. I don't think that we're going to be in a world where clarity isn't going to be a reality. So now I get it that there's a lot of OGs out there that, like crypto, whether it's Bitcoin or ETH or, any of the OGs in the center around saying that we don't necessarily need this. I think you have to look past that. You've got to look at where is this going to go as an industry. And I think that's where we are right now. I'm not agreeing with O'Leary. I still am on the fence. I do love DeFi. I still think that is a big part of this, as well as privacy. All of this plays into it. But what I do know is if we don't get this done and we get a Democratic House and Senate, it is going to get interesting and probably not in a good way for crypto. Oil, though, is surging right now, $100 after Iran's supreme leader ordered that enriched uranium must stay in Iran. Remember, they were talking about trying to get a third party to hold it. They talked about Russia. Then they come back and said this. Then, right behind that, you have another drop in it, another 2.3% after Iran denied the reports that they said that. So, I mean, this oil is trading like a yo-yo stock right now. And Mark Cudmore goes into a little bit of what this could mean in terms of an end to the war. Take a look.
We've got SpaceX coming. I've got an Anthropic IPO, OpenAI IPO coming. All of that's great news, isn't it? Why do I need to worry about oil prices?
I think that's an absolutely valid question, Guy, because that's what we're kind of trading in the short term. We've had a bunch of good tech news. So we've had the Samsung strike averted. We've had Anthropic making a profit in the last quarter as it doubled its revenues. We've had Nvidia showing that its costs are controlled, continue to make, just immense amount of revenues. So, we got the SpaceX IPO raising a large amount of money. There's so much good news in the tech sector and it's broadening out. And absolutely that's what we're trading in the short term, which is why we're kind of ignoring the strike. We're going, it doesn't really matter. If they don't get a resolution to the strike, it really does matter. And that's why I think there's an asymmetric setup.
Okay, I agree with Mark in the sense I think it does matter. And it will matter, especially, I think, to risk assets. The bigger part of this from a macro setup, as we've talked around at the front of the show, and that is around the Fed. What is going to happen next with Kevin Warsh? The other things that play into this is how the broader market, sucks out liquidity into a lot of the risk products that are out there. And one of them is going to be SpaceX. SpaceX opening at $1.75 trillion. Let me zoom in on that, guys. That's right. $1.75 trillion is their plan. They're going to raise $75 billion. This is more than double of what Saudi Aramco's was, which was $26 billion, record-breaking IPO back in 2019. So just remember, guys, this will start to put some pressure in the market in a very unique way. Now, I don't know that, and first of all, I'm not giving a financial advice saying you should go in and trade, SpaceX. This will probably be as volatile as we've seen on any of these openings. And remember, a lot of these stocks open to the public, all of these have been pre-sold. So that pump up is usually when retail gets a chance. That's what DeFi is for, what the opportunity that it really represents in crypto. That's the area that I think we should be looking in terms of where the market is heading. But if you look at this, SpaceX owns 18,000 Bitcoin right now. That's 1.45 billion. This is all coming in off the SEC filing. We'll probably learn a lot more about what's going on in many of these companies, including Anthropic. Could there be some sort of crypto connection on many of these? That'll be the question. Now, Tom Lee is now putting all this together into a new narrative. And it's an interesting narrative because it kind of packages this in a different way. Listen to what he had to say.
JP Morgan makes $60 billion a year, the most profitable bank in the world, with 300,000 employees. Jane Street is a firm that is newer, just moves money around, trading with a lot of quant and compute. And this year is probably going to earn $40 billion with 3,000 employees. So with 1/1000th the number of employees, they're almost as profitable as JP Morgan, and they're making more money than the second, third, fourth largest banks in the world. Tether, which is a crypto native, completely digital native bank selling a stablecoin called Tether, is going to make $15 billion this year, which would rank it as the 8th most profitable bank in the world with 300 employees. So I think that what's happening with blockchain is what happened with digital media, where there were the traditional studios and then there was Netflix. But my guess is that in 10 years, 5 of the 10 largest banks in the world will be digitally native companies.
Okay, Tom and I agree on that because it is an evolution, and it could be an evolution that has been as violent as the evolution of media, because media, what he's referencing is kind of the media from Hollywood to what's going on with Netflix. I think the bigger, broader picture is how media evolved from mainstream media and the dislike and distrust of it now to what you've seen now with podcasting, even shows like this. So the banking and financial industry, I think, does go in that way. Another area that you kind of have to consider, and that is this right here. Haseeb kind of hits on it right here. Ethereum is the Microsoft of crypto. Now, I would push back on that. Listen, I've worked for them for a while. The problem in the early days with Microsoft is they actually missed the internet. So I don't know that that's a good comparison. Let's just remember that. And they lost to Apple as well in terms of an operating system. Then, of course, they got killed on antitrust lawsuits, which kind of limited their whole. So I would hope that they're not Microsoft, or if you're an ETH lover or an ETH hater, I'm not sure which way he falls, but if I was looking at this, that would be a problem for ETH, because Microsoft, no. Do they eventually get out of it? Yes, and they become a great company like they are now, but that took decades to get there. Many people would say, well, that's how long it's been taking to get ETH to all-time highs. You have to look at all of these things kind of flowing into this. Crypto needs a big winner to lead us out of this bear market, and it might be happening right in front of us. Many people say it's going to be hype, and I don't know. Do you guys think that will be the case, or do you think ETH will actually come to the rescue finally and lead us out of the bear market? Drop your comments down below. What is the token that you feel is going to be the one that starts to get the attention of not only retail but also institutional? The other thing I want to hit on right here, well, you got to consider the love affair that we now have with Bitwise and Hype now trading. And this again is getting crazy. BHYP available out there, Bitwise Hyperliquid's ETF now launched under Bitwise. So huge deals. I think we'll continue to see movement here. Hype, of course, dominating right now around the perps market. There are some challengers that might hit that, but Hype definitely leading the way. If you look at the token right now, absolutely exploded off of about 38 bucks. Holding right now, trading at $58 as we record this. So we're going to be covering this and a lot more as we edge into clarity very soon, hopefully in June, with just a couple more weeks around the corner. So stay tuned for all that, guys. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.